Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our win and gold market. So in general, the pullback that we discussed yesterday to the confidence area and lower time frame has happened. This bounce up that we considered and we said that take a look, maybe it will be possible to take the short position around it. At least in general overall area looks suitable and market could reestablish downward action right from this point. Overall situation on the market stands supportive to further downward continuation on the gold. If we take a look at the dollar, you could see that we're one step closer to the appearing of the bullish grabber on the weekly chart, suggesting the strength of the dollar and possible action above this area, which will be probably some pressure and headwind for the gold. Additionally, if we take a look at the 10-year yields, market stance bounce up. Yields has jumped yesterday, forming bullish reversal bar on the daily chart, suggesting further upward action. So probably the shape of the hand shoulder seems, well, at least the current moment, it seems correct. And further appreciation also will support the deep retracement on the gold market. So from that standpoint, our trading plan seems correct, and gold should keep going lower in the nearest time. So returning back to the gold, on the 4-hour time frame chart, I do not see something really interesting. While on the 4-hour time frame chart, on hourly chart, here's what we have. That's our bounce that we discussed right from the XOP, and market is turning down here gradually. So if you have taken a position around 1960 that we discussed recently, so you probably now could move stops to break even and see what will happen. If you haven't taken, but you still would like to, here is a bit tricky moment exists, because take a look at the first glance, it remains the shape a bit skewed, but the shape of the hand and shoulders, and potentially it might be kind of the ABCD pattern to the 1972, right, before gold could continue downward action. But based on the analysis of the other markets and the situation on the markets that I have just shown you, the dollar index and 10-year bond, supposedly direct downward continuation here seems a bit more chances to happen rather than a BCD pattern. That's why here you will have to make the decision. So if you're, well, could wait, let's wait and see what will happen. Maybe indeed we will get the ABCD. If you still would like to take the position right here with this downward continuation, be prepared that it might be in opposite direction. That's why in the current circumstances, if you still decide to sell, maybe it makes sense to decrease the trading amount. In this case, if market indeed will show this upward direction, you could average your position at some and get some more or less acceptable level, because it will be not really pleasant moment if you get whole upward action against you. Although once again, as I said, chances seems not really very high that this will happen. But based on overall performance here, upward action seems more or less strong, and shape here stands. So who knows, maybe gold could show some kind of the ABCD pullback before downward continuation happens. So be prepared to that and just make the decision. Would you like to wait for some case to not risk too much and wait for the bounce and see what will happen and take position here? Or if you just can't wait and you are just worried that you will lose this trade, miss this trade if market will start immediate downward continuation. In this case, I suggest that it will be better to not take your whole lot, trading lot that you use usually for trading. Just decrease it, take the 30% of your lot here, not more than half of your lot, because risk stands significant that still this action could happen. So that's our view currently on the gold market. Let's see how it will go.